Carroll joins us on set. Stephen, going to start in the United States, where the video application TikTok has filed a legal challenge to President Donald Trump's order to ban it. Remind us again a bit the background of all of this.
So President Trump had claimed that TikTok, because of its Chinese owners ByteDance, represented a national security threat in the United States. He'd said that data collected on American users could then be accessed by the Chinese government. That's something the company has always denied, ever sharing user data with the Chinese authorities. But this summer, President Trump signed a series of executive orders against the video platform. One required ByteDance to sell its US operations within 90 days. Another would have effectively banned it from the United States had that not taken place. The deadline for that is this Thursday.
So what about this legal challenge then?
So ByteDance had negotiated in the meantime a deal with the software giant Oracle and the retailer Walmart, which would see a new TikTok US structure created, and they would all collaborate on this new venture. President Trump had given his preliminary approval for it back in September, but there was some disagreement over the exact terms of that deal. Since then, of course, Donald Trump has had COVID-19. He's also had a presidential election to deal with. So the US government hasn't still officially approved this deal, despite the looming deadline. TikTok filing this court appeal looking for 30 more days to try and get things sorted out.
How does Joe Biden feel about TikTok?
Well, a Biden advisor has been telling US media that it's too early to say what the president-elect feels about the matter. The Biden campaign, though, back in July had told employees to delete TikTok from their personal and professional devices due to security concerns. The president-elect told reporters back in September that he did see the TikTok issue as one of genuine concern, but given the deadlines involved, it's likely that this would be resolved before he comes to power in January.
Turning to another big Chinese technology company, Alibaba, today is its massive online shopping event called Singles Day, and it's set to be another record breaker.
Yeah, so just after midnight local time, Alibaba said they'd already sold 48 billion euros worth of goods. That's more than the 32 billion sold during Singles Day sales last year. Orders on its website peaked at a record 583,000 per second. Now, Singles Day is so called because it's November 11th. It's the date with all the ones, and that's why they call it Singles Day. It is the world's biggest online retail event, much bigger than Cyber Monday or Black Friday. The figures are much bigger this year, partly because the discounts started earlier. They were started on the Alibaba sites at the start of November, and the company counts the first 11 days of November when it comes up with these sales figures. So that's how it ends up being so difficult. They're not the only ones to get involved in this. Rival Chinese companies like JD.com are also having Singles Day sales, and I've even seen some French companies as well promoting it too.
Any excuse? Well, the boost for Alibaba comes at a good time. It had been facing challenges.
The company lost 10% of its value on the markets last week after the flotation of its financial arm, Ant Group, was delayed at the last minute, suspended, I should say, at the last minute, that wiping around $76 billion off the value of Alibaba. The Ant Group cited changes in financial technology regulatory environment for the suspension of the flotation. That appears to be a reference to new rules announced in China, which would govern micro-lending, which is one of the most lucrative part of the Ant Group's business. Alibaba itself could also be facing new regulations in China. The Chinese government publishing earlier this week new draft rules aimed at preventing internet platforms from abusing their dominant position or blocking competition from others as well. So that could be something that Alibaba is facing big challenges about in the future.
So looking at the broader picture, how's that playing out in the markets then, Stephen?
So despite that massive spending spree, that almost 48 billion euros already spent on this, Alibaba shares are actually down over 9% in Hong Kong today. Clearly those regulatory concerns are weighing on investors' minds more than how much money people are spending during Singles Day. More broadly on the Asian markets, there were gains in Tokyo and in Seoul. The Nikkei actually finishing at its highest level in 29 years. That's after the recent rally that we've seen on the markets, which is due to optimism over a coronavirus vaccine. Here in Europe, markets seeing gains at the open. Travel and leisure shares and oil companies leading the gains at the start of trading here in Europe. Again, though, the technology sector is where we're seeing the laggards in the industry, and that's following the trend that we've seen over the past few days.
Okay, Stephen, with the business update, thanks a lot for that.